Hey, this is Mac with PriceActionTradingSystem.com. This is Wednesday, November the 28th. This will be our chart lesson for today. And today was a really interesting day. What started out as a really strong downtrend and looked like we were probably going to sell off all day turned into a really strong uptrend before the day's over. And what's really interesting about this day is not only is it a reversal type day, it's also, there's a bigger channel in here with some fairly obvious things going on inside that channel. And this is why I'm always telling you, when you get two swings in one direction, always draw your lines, and you may end up removing them. Don't let it get so cluttered that, you can't see anything in here. But if you were drawing your lines today and you found the bigger picture on top of the short-term trends within, this all made a whole lot more sense because it was a little bit confusing until we got this reversal right here. Because then you could draw this line, and you actually could have gotten this line right here before prices ever even came down here if you simply took these three pushes up here and drew a line and then drug it down. And you can see that's just a copy of that line, and it's amazing how that fits right in there. So you can kind of see that right there. So if you had that line right there, if you drew it, and you can see it came into play again up here, you could have known where to look for a possible reversal right here. I actually missed this trade right here, and I'm kind of mad at myself because I did. But there's more than one reason to enter here, and I'll show you that in a little bit. So you could have found this, but the reason I missed this is because I was in this short coming down through here, and I was too busy thinking about where I was going to exit when I should have been thinking about maybe reversing. But since I was in my shorts right here, that's kind of a when I think about it, that's kind of a funny statement when I was in my shorts right here. But when I was short the market right here, I was too busy concentrating on where I was going to exit my shorts, and I wasn't thinking ahead. And that's probably okay because you don't want to be thinking ahead and screw up a good trade trying to think about another one because maybe prices don't bounce here. But just thought I'd share that with you, and I'll share you more about what I was thinking and what was going on with me when we get to this point. So, but it's a really interesting day. I'll try not to make this too long, but I want to cover all this because this is all important stuff. And, this is the key. The key is finding the lines. If you find the lines, and somebody made a comment, it was either yesterday or the day before, but somebody made the comment that, hey, Mac, you make it look so easy. Well, it's not really that easy as it looks after the fact. However, it is fairly easy. It's what's between our ears that make trading so hard. It's the emotional aspects that make trading so hard. And one thing some of you will find is that you will finally be able to do this on the Sim Trader, and you'll have really good success, but that won't translate over immediately upon going live. And the reason is because when you're doing it on the simulator, really the only thing you're able to prove there is that you understand how to read the chart. You still got to get past the next hurdle, which is the emotional aspects, which are all triggered by your brain and the things that you're thinking between your ears when you're trading, and that's all driven by fear and greed. And you may think that's not going to affect you, but you just remember this. You just remember what old Mac told you down the road. It's going to affect you, and it's the next step. But that's the thing. It's the next requirement in becoming a profitable trader. Is not just learning where the entries are and how to exit and how to read the chart. Then you got to learn how to control your emotions. And everybody's going to go through it. I went through it. I figured this out. Price action way before I was able to consistently do it. I could get on the simulator and make money every day, day after day after day, thousands of dollars. But then when I went live again, I struggled for a while because I'd do good for a week, 3 weeks, a month, and I'd suddenly have a brain lapse, and I'd make some mistake, and I wouldn't admit that I made a mistake. So the biggest thing you can do is just when you're wrong, admit you're wrong, take your hit no matter how bad it hurts, because I guarantee you it will be a small hit compared to what it will be in the end if you continue to hang on to it. So, and that's what would get me. I would get it right day after day after day, and then I would get one wrong, and I would refuse to admit I was wrong, and I would do things I shouldn't do, like hold on to it too long, or bet that it's going to come back, or double down trying to sneak out. Something dumb I would do, and it would always come back to haunt me. But I'd only do it once, but it would be enough to hurt me and to erase a week or 2 weeks or a month or 2 months worth of trading results. So anyway, I didn't mean to get that far into that, but since it came up, it was worth discussing. So just remember, you've got to control the emotions as much as you got to learn how to read a price chart. So, but anyway, let's get started on the trades. Let me back out here a little bit where we can see it. But you can see we were in this channel coming down. This was very easy to find. The first couple of swings of the day right there. Wasn't hard at all to find. Let me just, you might have had it drawn more like that right there. And if you just copy that, drag it down, you kind of see that was the lower end. And really what you want to do, oops, you know, you might have had this down here, but really what you got to do is when it's bouncing over and over like that, you got to move it to where you get the most touches, and I believe that's probably close right there. And so that's what we were really kind of looking at. And actually it might have been more like this right here, because notice we didn't really bounce there. We kept going lower. Well, yeah, we did. We did end up coming back. So I'm thinking that's probably it right there. But you got to figure out where you get the most touches, and that's generally going to be it. You at least need a couple of touches. So at the very least, it probably would have been like that right there. You still get this overshoot down here, which is going to be important. So we'll talk about that in a minute. But the market opened in here somewhere on this little move down. There's really, you know, it was really dangerous going short in here though, because we're so close to these lows and we're moving down. So you got to wait for a pullback. And you might have considered going short right here because but we never touched the EMA. We never touched the trend line. It's rather risky. You can see it work, but look, it snapped back real quick and you still get a chance to enter. About the same place, maybe a little bit lower, and then look at this move. You don't have to take any heat. You don't have to guess. You know, it's coming off the trend line, and this is what I was making a comment not long ago. These are where your best trades are always going to happen, is off the trend line, and you want to always have the trend line at this point, just like right here, unless you drew this off the tops right here first and drug it down. You wouldn't have known necessarily that's where the trend line is going to be, but look, it's off the EMA all the same, and that's where your good trades are always going to happen. That's where your big moves happen at. Look what happened when we got down and touched this line, and again, you wouldn't have found this line unless you found it up to the top side first and drug it down. But look what happened when we hit that area, and then look, we had this little trend line up through here. That's where your moves come from. It's the strong support and resistance, and you may not find these strong support and resistance, but they're there. And so your job is to try to find these lines so you know where the big moves are going to start at. So keep that in mind, and that's the whole point of me trying to tell you, look at the moves that come off the trend lines, because you may not find the trend lines, but if you do, you can see the potential that's there. You know, prices didn't take off here just for the fun of it. There's a reason that prices took off here. It's where the strong support was, and it's along these lines, and the lines can either be flat or they can be horizontal like these lines, or you know, parallel. You know, they can be flat horizontal lines like this, or they can be angled lines, I guess is what I'm trying to say. Trend lines are basically just angled support and resistance line. So keep that in mind. It's very important. That's the most important piece of this. But the first time chance you got opportunity really for a good entry was right here. There's no reason you shouldn't have that trend line. I always tell you usually find your trend off the first couple of swings, and there's your first two swings coming right down through there. And, you know, even if you'd have drawn it a little steeper than that, let's say you drew it like that, um, you still, that actually would have brought that one into play, and then this one, and that actually might even be it. I may have had it drawn a little off. See, and that's what I'm saying. I always play with these lines. And now that I look at that, I like that even better because that gives you that meets our criteria even better than just overshoot down here, because now you got a break of the trend line. That also sets up why that probably sold off right there, and then that's a fairly good break of a trend line, and then two legs down to a new low and then reverse. So, you know, after the fact, I think that even looks better. And let's just see what it looked like if we copy that line. We'll bring that over to here. Well, you know, it looks more wedge shape actually. And that may be it. We had a wedge here. We had to break the trend line. We two legs down to a new low. We overshot everything, and then we reversed out there. So that kind of explains the reversal, because I kept, you know, at first I was looking for a possible pullback to a new low, and we never got it. We just continued to rally. But now, just looking at it with a little different eyeball right there, playing around with the lines. But that shows you don't have to always get the lines perfect. You know, if you get close, you're generally going to be okay. And so, but now that I look back, I believe that's it right there. So anyway, you got a chance to enter here. I didn't mark it because before I had a different trend line, and we'll just go back to my original one, but I do believe that was it. So either way you got it, it fits the same thing right there. Your shorts right here. You move down, you got a new low. There's a double bottom down here, and notice this. There's your double bottom. Notice that tick right there. It ticks one tick lower. That's the best kind of trap or double bottom, because there's so many people that are going to go short right there and get their stops run right there, and then it reverses. And you know you're probably going to come back up here. This might have been a little, I drew this one in green, and that just another point. If it's green, it means there's a trade set up there, but it's a much more aggressive. It's, you know, the good trades are the shorts are red, and the good longs are I do in the blue. And if I put it in green, it means it's an iffy trade. It still meets our criteria. It's just a more aggressive setup. And the reason is because we're in this downtrend, but we got an overshoot here based on what I had drawn originally. Regardless of whether you got an overshoot, you got this double bottom and you got this trap and you turned up, so you can go long right there, you know, with the assumption that you're at least probably coming back to the EMA, probably the trend line. But you can see what happened is you just catch the low of the day right there, and it's off to the races, and you could have ridden this as far as you wanted to go. And unfortunately, I didn't ride this one far enough because I was still kind of looking for a pullback here. So, um, and actually, I didn't mark that trade right there. I should have had a short right there. So I was looking for shorts up here, and I got caught off guard when this thing just kept going higher here. Um, it looked like it was going to set up, but then look what happened by the time it triggered or ticked lower. As you got three overlapping bars, a doji. No, you don't want to be going short right there because it can, you know, it's congestion. It's probably going to snap back, and so you wait on the next entry, and there it was right there. We broke out the top side, and you know it's coming back. There was a nice short. And again, I thought maybe I was going to catch a really good short and ride this down, but it bounced right here. You got a second entry long, first entry short, second entry short. It failed. It bounced right off the EMA, and if you drew a line right here off those two swings and drug it down, you might have even found that trend line right there. I didn't have that trend line right there, but I still knew I wanted to go long based on the setup. And did I know it was going to take off like that? No, I had no idea. But now that you got it moving up like this, and here's something you got to think about. There's leg one, so you got to be thinking target should be up here somewhere. And so there's another second entry long right there. And notice how that it didn't go a whole lot higher, but It's a second entry long. It's 2 legs back, and we've got a pretty good rally going on at this point. So hopefully that makes sense. I didn't talk about this short right here, but you notice how we didn't go very far and turn, and that's a kind of a bearish bar. And so at this point, you could still kind of be looking for shorts because we hadn't really started making higher lows and higher highs yet. We made one kind of higher low right here, but when we made this double bottom, that was fairly telling right across there. And then this is a higher low here as well. So even if you don't have this trend line in there, you know, when you can get multiple reasons to enter, you got to be paying attention. And so that was it. And then you had the two-legged pullback along right here. And then this is really the first break of this little trend channel right here. And so and on a bigger picture, it's a second entry. There's a one leg back, a little two-legged move up, a second leg back, and then it takes off again. So it's a nice long right there. You're looking for a retest of the high, and there it goes. And evidently a lot of people saw this little channel because now all of a sudden you start getting the correction after the trend line break and the two moves up to a new high. And you would have had this right in here by now. And so now look what you got. You actually got two legs back, but this is one leg on a bigger picture, and then a correction, and then another leg down that's equal to this one. So whenever you get a two-legged correction in between, generally you're going to get another leg on the other side, and that's so you can see you got one leg, a little correction, so you figure this leg's going to match this one, and that's what happens. And then you kind of got a little one leg up, pull back, and then another little leg up. And so this leg you would expect to be similar to this one. Let's just measure them and see how close. I never measure them, but I can just eyeball it and tell you they're real close. You can see that. They're real close, maybe a tick or two difference. It's amazing how many times it will be exactly the same per tick, though. So there's a short right here because we have the trend line break, and you could have considered shorting that one, but I'd rather wait. When you've been this strong, I'd rather wait on the second entry. And even this one, I started to make it green, but it's a pretty good setup. What you really should have done when you had this green bar here, when you broke above it and then turned down, you should have had your stop right there so that when it ticked below there, because if it went through there, that's a good sign that we're going on lower. So I was in right here, and I entered it right there, and you might have entered, and I wanted to enter again below this bar, but notice it never triggered. It went down, and so then by that time you got all this overlap, so no reason to, and then I wanted to enter right here too, but it didn't close on its low. It closed 2 ticks off its low. And so you don't want to be really going short below that bar. But I knew this trend line. I did have this trend line. This one's fairly easy to find right off your first two swings there. And so this was your entry bar. It never triggered. Then your next one wasn't until you could have been thinking about that one, but that one's still bullish, and then you got all the overlap. And so when it ticked, what I did, this is the way I entered, when it ticked higher right there, and this doesn't look right since I corrected that a little bit. There you go. The way I entered this is when we ticked one tick higher than this bar right here and then turned down, I went ahead and put my entry stop right there, knowing that if we turn down right there, the key is whether we break above that bar during this bar. So in other words, if it stops and it's equal, then you got the overlap. But when it goes on through there, that's a pretty good sign, and that's the way I entered this trade, and it worked out great. And so I had some shorts on, some runners going here, and I'm managing the runners, and that's why I missed this long and didn't get into right here. But what I was, on my exit, I was looking to exit off the low side of this range. And so I would just put my stop. Actually, I think I started right about here, but didn't exit till maybe right here. What I wanted to do was exit my shorts right as it went into this trend line. So you got to kind of keep it a tick above, in other words, because a lot of times it will touch it to the tick and then bounce. And so, I almost wanted to get out here, but I kept saying, no, we haven't touched it yet. And we actually went all the way down. So even if you didn't have this line right here, let's talk about this trade. I missed it again because I was managing these shorts, and I was thinking about exiting my shorts more than I was thinking about getting long. And I really didn't know that we weren't done for the day and weren't going to get another leg down like this leg. Something similar to that. And that could have happened here. But notice what happened instead. We had this double bottom. You can see that. And we found support right there again. And we ticked one tick lower. And then this closes a doji. You could have gone long right there. Any runners would have been easily safe again. You could have ridden this, all the way to the highs to close the day if you wanted to. But you definitely should have ridden it till you got back up here to this line based off of these lines coming up through here. And you should have also found this lower line by that point. A lot of times if you don't have the points on the lower side, see if you can find them off the upper side like this. And so my guess is we'll probably get a bounce again when we come in here. It's into a different trading day, but I bet you we still get at least some support right in here when we come down to that, if it comes down that far. So anyway, this was a good long here. And if you didn't go long there, you definitely still could have gone long above this one, because we got this overshoot. And really what you got to be thinking now is anytime you get a leg like this and then you get two leg correction in there, the odds are, let's back out so we can see this, and you can see it better there. You got this, on a bigger picture, this is a leg up and then a correction. And so let's just look and see what we got right here. There's your leg. So what we ought to be thinking, hey, is our target's going to be similar to this leg right here. You move it up and look at that. We didn't quite get there, but we got real, real close. And so, that's what I was using for my target on any entries on the upside now. So just remember that. And that is a clue that I like to use. It doesn't always, nothing holds true, nothing's 100%, but when you get a move up like this, and then suddenly you get two legs in the middle and you start reversing again, there's always a good chance that this is the middle of the move, because that's what you see. You see two legs in the middle of the move. And I missed this entry. I didn't want to be entering, way up here, so I waited on the first pullback right there. That's a second entry long, and you got to be thinking a move like this before you probably get a correction. There's leg one. There's leg two, and look, and then it corrects, and it went on higher, and it's getting dangerous entering in here again without it coming back to some kind of support area like the, you can see it worked, but really your entry was here. You didn't want to be entering way up here. You don't want to enter too close to current resistance, because this is what happens is it tries, like right here, it goes higher and then it sells off, comes down here and it goes back up, it gets up there, it sells off, gets back up there, and it finally ticks through, but it sells off again. I mean, that's why you don't enter too close to resistance, because it's going to fail most of the times. And that's why I'm always telling you, you're better off to fade these trades. Even though these were counter trend, they were better trades than trying to get long up here. So keep that in mind. You got a two-legged pullback right here to the EMA. If you drew this trend line right here off those first couple of bars, that first swing, but even if you didn't get that, you got a little trap here that reversed. You go long right there. Nice, easy move. No big runners on this one because prices came back pretty quickly. You should be drawing a line off of these couple of moves, these right here, and look what happened. You get another bounce when you get those two dojis there. Another long right there. This time your runners were safe, and so you could have ridden this all the way up the rest of the afternoon. And, there are some shorts up here, but on a trend day like this, when your target's way up here, you're better off just stay with your longs and keep looking for longs, and you can see that all the way up. It's really too late in the day here. There's still some setups in here. Still could have been getting long. And when you start to see these little tiny bars, a lot of dojis that just keep going higher and higher, just kind of like it looks down here, that's a strong trend. It doesn't look like it, but it is. And so don't let it fool you. And, you know, why they started buying down here, one thing that I can tell you is that this is kind of the 1400, this is one of those century marks. And, you know, when prices get near it, it's like, you know, they work both sides of it over and over until they finally continue moving on. They're just important psychological areas. Whether or not that's why, you know, we had this rally today, you know, I don't know. But it's just something to keep in mind. But it was a really interesting day considering it started off so bearish. And, you know, we did have a lot of news today. And we met some FOMC stuff that came out today, not the big FOMC news, but still you got to always be aware of that stuff. And it just was a really good trend day. And, you know, we don't really care why, as long as it's moving, that's what we want to know. But in closing, what I'll tell you today is that looks kind of messy right there, but if you back out, you can see it's really not as messy. And draw your lines and try to find them and look for your ones on the, you know, you definitely should have had these easily, but you should have been looking for the ones on the bigger picture as well, because of what we did, we just had a big channel in here and we had some smaller trends and channels within that bigger channel. So, you know, draw your lines and, you know, just even when you think you got them right, like I thought I had that one right, and, you know, I started playing around with it, and lo and behold, now I found a wedge there, and that really better explains the reversal than the overshoot. So, you know, always play with your lines. Don't let your chart get so junked up that you don't know what's going on or that you can't read the price action. You know, once a trend line, like especially like these short-term ones, just, you know, once it's over, get them out of the way, and then look, it kind of, you know, it kind of looks, you know, it's just not as confusing, I guess is what I'm trying to say. So, and you never know where a new trend or channel is going to start, because like I said, there's channels within the channels, and I guarantee we can go down to this level and find a channel. Let's just do it real quick. Find a channel real quick. And you can see that. There it is right there. There's a channel within this channel. And there's probably one within this channel. You know, you don't want to get down to such a level that you can't see anything, but just always keep in mind that you can draw these short-term trend lines too, and they help you. So anyway, this is almost 30 minutes. I'm going to wrap it up. I hope you had a good trading day. I hope all this made sense to you. It's throwing a lot at you at one time, but this was just a really good example of a day that there's trends within the trend, and you know, it's overall, this is a very bullish trend coming up through here, and you got your little correction in the middle, and so then you got to be looking for a measured leg on the other side, and that's how, you know, you find a lot of your targets. So keep that in mind. I'm going to wrap it up. This is Mac with PriceActionTradingSystem.com. And we'll see you next time.